Cathie just gave us the ARK in the know market update last night, and it's linked below if you want to watch the full commentary. In this episode though, I want to help add some color to this commentary so you get the most value possible from these market updates. And I do want to share an ARK investment that took a hit this week that could provide a great buying opportunity. Cathie felt pretty strongly about the new potential stimulus package and what it would do to the US economy.
Wait a minute. The economy is already well on its way, and this is going to set it on fire. And I agree with that. And that will be a good thing. We will have a lot more jobs, but we will have a lot more policy decisions to make as the deficit mounts and maybe some inflation indicators start flagging here.
She also believes the stimulus package would be overkill given the current state of the economy. The package the Biden administration is proposing is 3 times bigger than the one the Obama administration presented during the worst financial crisis since the Great Depression. So take that for what it's worth, but I know many investors are going to take this as a signal that the market will have plenty of room to run if this package passes. Cathie also spoke about the US trade deficit, which is just when a nation imports more than it exports. In 2018, for example, the US exported $2.5 trillion worth of goods and services, while it imported $3.1 trillion, creating a trade deficit of $621 billion. Cathie believes this trade deficit may come down as spending in the US shifts to services which are domestic, away from goods, many of which are imported. This could help to strengthen the dollar. And look, I know some of you don't care much about macroeconomics because Warren Buffett has brushed them off in the past, but he also missed Tesla and Bitcoin, so remember, no one person has all of the answers. But don't take it from me, take it from one of the best investors we've seen and one of the smartest people I've personally ever listened to, who also happened to retire at age 36, Raoul Pal.
So what is macro analysis and why does it matter? These are the key things, and Julie and I both feel passionately about the world of macro. Macro really is looking at the top-down view of the world based about how economies move, the macroeconomic variables that drive asset prices. Now, if you don't believe me, you can just look at a chart like the ISM, which is the Institute of Supply Managers survey, which goes up and down and basically tracks GDP, but it's on a monthly basis and GDP is quarterly. Now, why does that matter? Why do we care about where the economy goes in the US, for example? It's because when you put asset prices against it, asset prices move with economies. And that's kind of obvious, but most people misunderstand that. Is if the economy is doing well, then asset prices do well. When economies do badly, asset prices do badly. So understanding where economies are going is crucial. Now the problem is the world is not an isolated world of just one economy. Yes, the US is the most important economy, but there is a whole number of other macro variables, how other countries are doing, and the interrelationships between those countries. That's what drives exchange rates, interest rates, it drives equity prices, it drives the opportunity. Should I be invested in emerging markets? Should I be buying gold? Should I be buying metals or industrial commodities or oil, or should I be selling them? These are all macro things. You know, whether Netflix does better on a quarter, that's not macro, that's a micro variable. And Julie and I are less interested in that, but when things get extreme or there's turning points, that's when macro matters, because it is the biggest driver of portfolio returns over time. It's just that most people don't understand it because it's complex. It requires homework, analysis, and a broad understanding of the world. And it's easier to try and punt a stock based on a chart and the potential for some news flow. But that is not really what builds long-term investment opportunity. And that's the key thing about what macro is and why it's important.
My goal here is to help all of us become the best investors we can be, and that means, in my opinion, being educated on the macro environment as well. Cathie believes the savings rate could move up from the 13.7% currently to 20% if this stimulus package passes. The savings rate is just the percentage of disposable personal income that people save rather than spend on consumption. This is is an important metric to track as this number peaked at 34% during the height of the crisis last year, and the more people that are saving, the more firepower consumers will have for when their confidence comes back, as we saw with the V-shaped recovery in at least some sectors in the market. Now, for a specific investment for you to take a look at, Cellectis, ticker CLLS. According to ARK's most recent 13F, they own about 4.1 million shares of CLLS with a value of about $76 million. Doing the exact math as of their latest 13F, that would give ARK a cost basis or average cost per share of $18.49. As of February 5th, 2021, Cellectis makes up 1.31% of ARK's ARKG ETF, their Genomic Revolution multi-sector ETF. If you see ADR by Cellectis, that's just short for American Depositary Receipt. This is just a certificate issued by a United States bank that represents a specified number of shares, usually one share, of a foreign company's stock. ADRs trade on US exchanges just like any other domestic share would. Basically, these ADRs give us investors a way to purchase stock in overseas companies that would not be available otherwise, and the foreign firms also benefit because these ADRs allow them to attract American investment and capital without the hassle and expense of listing on US stock exchanges directly. In a quick Cliff Notes overview for now, Cellectis SA is a biotechnology company focused on developing immunotherapies for cancer. And just FYI, the SA after the name is just Société Anonyme, a French term for a public limited company or PLC. A Société Anonyme is the equivalent of a corporation in the United States or a publicly traded company. So Cellectis engages in gene editing in an attempt to lead the body's immune system toward attacking cancer cells. They work through corporate partnerships and a few university clinical centers. Their gene editing technology allows for the creation of healthy cells derived from healthy donors rather than the patients themselves. The company reports two main segments: therapeutics and plants. Their therapeutic segment focuses on novel cancer therapies, while its plant segment focuses on agriculture biotechnology. In our next episode, we're going to take a closer look at one of ARK's new big ideas for 2021, Cell and Gene Therapy Generation 2, so be sure to subscribe and hit the bell so you don't miss out. But back to these 13F filings, there's something really important I want you to know. Yes, 13Fs are a quarterly report required to be filed by all institutional investment managers with at least $100 million under management. They disclose equity holdings and can provide insight into what these firms are doing in the market, but, and a huge but, there are issues with these reports sometimes, as the SEC has actually admitted to not analyzing the content for accuracy or completeness. Bernie Madoff was filing 13F forms every quarter, and these are usually filed 45 days after the end of a quarter, and many money managers submit these forms as late as possible because they don't want to let the competition know what they are doing. Here is a table of the current filing deadlines, and as you can see, institutions currently have until February 16th, 2021 to file their report for Q4 of 2020. And so this negative 20% move in Cellectis on Wednesday of this past week was for reasons unknown to ARK, and they said there was little news that they could discern to explain the downward move. In the next few days, we should learn more about how ARK Invest has changed their position, if at all, in Cellectis over the past few months, so stick around to see the latest news there. The biotech stock space is still in its very early days in the grand scheme of things, but it is drawing massive attention. There has been a boom in development and private funding, which hit $16.5 billion in the first half of 2020 alone, with over 44 funding rounds of $100 million or more. More money, of course, means more research and development that could lead to huge medical breakthroughs over the next decade. But I need to warn you all that investing in this space is incredibly challenging, and it is wildly complex with FDA regulations, understanding genomics and the science, and putting all of that together is, quite frankly, beyond the ability and even interest of most everyday investors. You can, however, use a site like StockCard to do some initial research on different topics. If you go to the Discover tab and type a theme like biotech, it can be a great place to start your research. But these biotech stocks are usually very volatile, which is great on the upside, but very painful on the downside. You really need to do your due diligence in this space and give these companies time to work through the years of R&D before seeing any real breakthroughs. CRISPR Therapeutics is one of the companies on the cutting edge, and we'll take a closer look at this company in the next episode, as well as Exact Sciences, another name to watch. But please take a moment to like this video if you did, and subscribe and hit the bell to make sure you stay ahead of the curve, and I'll look forward to seeing you in the next episode. I hope that you have a great day.